This is Alan Bush with the Daily Financial Forecast for Thursday, June 9th. Starting out with the stock index futures, we are seeing prices under pressure this morning. This is primarily due to energy prices that are weaker, with crude oil at one point down about $1 a barrel. Since then, though, crude has come off the lows, and so have stock indices. Still thinking that longer term, the main trend is higher for all of the major stock index futures. And it was just yesterday that we did see the S&P advancing to a new high for the year. Now, moving over to the currencies, the dollar index gaining today after 4 days of declines. There seems to be no specific news that would account for dollar strength other than possibly some short covering after several days of weakness. But the fact that we are higher in the dollar suggests that we may see further gains, especially in light of no major news that would account for dollar gains. So look for a little more dollar strength with what we're seeing technically. Also in the British pound, we are seeing that market a little bit lower, even though we did have some very good export news coming out of the UK. In fact, export numbers showing the best numbers in almost 3 years. And yet the pound lower. And I think this may be linked to ideas that the Leave campaign is gaining momentum. And I think the fluctuations in the pound, especially as we get closer to the June 23rd referendum, could be a good proxy for which way the wind is blowing as far as the potential for that referendum and the possibility of the UK leaving the European Union. Also, we are seeing gains in the yen. There seems to be growing dissatisfaction within Japan's banking industry with negative interest rates. So pressure there to slow down the negative interest rate process or possibly go back to positive rates, at least as far as pressure from the banking industry is concerned, has to be viewed as somewhat of a bullish factor for the Japanese yen. Also, the commodity currencies, the Canadian dollar and the Australian dollars, both lower as crude oil under some pressure. That's the normal relationship there. And in the interest rate futures markets, seeing higher prices, this mainly due to stock indices weaker, crude oil weaker, so that's the normal relationship there. Also, we are getting to the top of a resistance area on the weekly charts. Still thinking, though, that longer term, the fundamentals are offsetting with the bullish impact of a Fed that is slow to raise interest rates being offset by the bearish impact of growing inflation numbers globally. Also, we had a recent survey showing economists believe that the Fed could raise interest rates at the July meeting, and in fact, 51% of economists in that group survey thought that they would raise rates. However, financial futures markets predicting only a 24% chance of a rate increase in July. My feeling is no rate increase in June at the June 15th meeting, no increase in July, maybe one at the end of the year. Also, precious metals putting in a good performance. We still like gold and silver from the long side. We also continue to believe that gold and silver are in for a multi-year bull market. So, good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.